In Hong Kong, Jardine Matheson Holdings and Jardine Strategic Holdings have traded for the last time as blue-chip Hang Seng Index constituent stocks. Both Hong Kong stocks dropped sharply in an otherwise dull market yesterday. Jardine Matheson lost 0.9% and Jardine Strategic was off 4.4% by the end of trade. The stocks were dropped from the blue-chip index a month ahead of their year-end delisting from the Stock Exchange of Hong Kong. They have been under downward pressure since the delisting plans were announced in the first quarter of 1994. The management of Jardine, Hong Kong's biggest private employer and oldest business group, decided earlier this year to pull the listings after market regulators refused to excuse the group from local takeover rules. Well, joining us from our Hong Kong studio is Philip Chan, Research Director of Shanghai HK International Securities Limited. He's here to talk about the stock market there. Philip, good morning to you.
Good morning, Karuna.
Philip, the new index members coming in today to replace Jardine Matheson and Jardine Strategic are no lightweights. Do you see them helping boost the Hang Seng significantly today, despite the fact that the Jardine Group accounts for 7% of market capitalization?
I don't see the new entrants coming in today significantly boosting the market, because the turnover in the new stocks has already been picking up in the last few months since the announcements were made that they were going to be included in the index. So I don't think they're going to make a dramatic difference today.
Okay. Well, after the delisting from the Hang Seng, Jardine is encouraging trading of its shares in Singapore. Do you think this is a step back for Jardine, and how will it affect its business, if any?
Operationally, I don't think it's going to affect their business at all, because they'll still have the ongoing businesses in Hong Kong and in southern China, etc. All it will mean is that the reporting requirements and disclosure, etc., will now be focused more in Singapore when the company has to make an announcement. In that sense, Hong Kong investors, to Hong Kong investors, the shares will be a little bit less transparent now.
Okay.
But operationally, no difference.
All right. Well, looking at the market overall, investor confidence seems to be remaining low there. Are traders overly concerned about another possible interest rate hike in the U.S. in December?
That is a worry, because it seems that investors here think that there's going to be another interest rate hike, but it seems, my opinion is that I don't think it's going to happen before the end of this year, because I think that basically because it's coming up to a holiday season. But the Fed will also want to see what the lagged effect may be on the economy after all the recent interest rate hikes that we've had, and just to see what the effect has been on the numbers when they're published in, say, January, February, before they make any decision.
Okay, how about the mood in Hong Kong there? It seems to be that there's this tide turning against new equity investments, and investors may be putting their money, or will be starting to put money in banks or buying bonds. Do you agree with this trend?
Depends on the investors, what is risk, how risk averse he is. I mean, if they're looking for safety, then of course they're going to put it in bonds or in the bank to earn bank interest. But I think you can still buy selective stocks out there, because once you have a resurgence of confidence in the market, which could happen any time, then the rush of international money into the market will be quite fast, I think.
All right. Well, given this background, what do you think your outlook for the market there will be?
Well, unless we do have major sort of new money coming into the market, then I think that the market will continue to trade in a fairly narrow range. And I have said in the past that it would be something like 8,500 up to possibly 10,000, maybe slightly more than that.
Okay, Philip, that's all the time we have for now. Thanks very much for joining us.
Okay, thanks.
That was Philip Chan, Research Director of Shanghai HK International Securities Limited in Hong Kong. Tokyo